Breaking up Google is now an option. Now, of course, with big tech companies, we've heard about breaking up monopolies for quite a long time. But apparently, right now, breaking up Google is an option being considered by the United States. The US Department of Justice is considering options that include breaking up Alphabet's Google a week after a judge ruled the tech giant illegally monopolized the online search market. A Justice Department spokesman said it is evaluating the court's decision and will assess the appropriate next steps consistent with the court's direction and the applicable legal framework for antitrust remedies. The verdict, delivered last week, held that Google violated antitrust law, spending billions of dollars to create an illegal monopoly and become the world's default search engine. The ruling is seen as the first big win for federal authorities taking on the market dominance of big tech. The DOJ's other options include forcing Google to share data with competitors and instating measures to prevent it from gaining an unfair advantage in AI products. Now, with regards to this right here, spending billions of dollars to create an illegal monopoly and become the world's default search engine, they're talking about Google paying Apple and Samsung billions of dollars to be the default search engine on their phones. Now, if this is not allowed anymore, this is 20 billion, if not more, that Google does not have to spend. This is also 20 billion, if not more, that Apple will not get any more. Now, of course, some people then won't use Google search. But in my opinion, Google search is the most used option because it is the best option out there. It's at least the option that is the most popular around the globe, right? If you want to search something, you say just Google it. So they've got that. Plus, in Europe, on iPhone, apparently, I don't have an iPhone, but I've seen some people say that when you buy a new phone, you have the options. You have the options to choose between search engines. That has to be done when you buy a new phone so people know what options there are. You cannot go straight into your phone and go, Safari is just Safari or it's just Google. So maybe that might be an option as well. But let's talk about what might happen or what might not happen when you break up such a company. I'll also talk about something that happened in 1911. Yes, a long time ago, and how that played out today. So stay tuned, hit all the buttons, like, subscribe, especially the notification bell on. That's the most important button. So hit it. So YouTube, by the way, this is a Google video. If they break up the business, then probably YouTube is going to be a standalone company as well. I think it's a pretty good business. But more on that in just a second. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let me start with a story from a long time ago. The story of John D. Rockefeller's controlled Standard Oil. So in 1911, it was found to be engaging in anti-competitive practices. The Supreme Court ordered its dissolution into 34 separate companies. Not all of them survived, and those that did merged with another and became what we know today: Chevron, Exxon, BP, and Marathon. So, yes, it's true that for a long period of time, it did solve the monopoly problem. But let's be honest, technology, manufacturing, the industry were not as fast, as developed as they are today. So if you think that, oh, look at this long period of time where you had multiple companies. Yes, okay, but in my eyes, I think that 40 years, 100 years ago is the equivalent of 4 years today. Because today, things are moving extremely quickly. Plus, with Google, for example, or even Microsoft, you're not talking about extracting stuff from the ground. You're talking about digital stuff, digital company, digital program, software. These things move extremely quickly and they are everywhere, right? With oil, I don't use oil right now to talk to you, right? I use YouTube. So it touches many folks. Of course, oil is very important for everything that we do in everyday life, right? Fine. But let's be honest. You're going to break up Google. How are you going to do that? Are you going to make sure that everybody keeps his job? Are you going to make sure that everything that Google has created will still work well with each other? Because imagine they want to break up the business, right? To say, oh no, Google cannot control this anymore, Google cannot control that anymore. Yeah, okay, but what happens with all the companies that have built stuff on top of Google's softwares, products, you name it. You have to take all of that into consideration as well. Governments, companies, sports teams, you name it. It's not as easy as it sounds. Plus, if you needed a small reminder, you first have Alphabet, the parent company. Then you've got Google, and Google is the one that has ads, Android, apps, maps, search, YouTube, infrastructure, Google Cloud. So, yeah, that is not an easy task to start and break up this company. If you needed a small reminder of what has happened, well, first of all, you've got three big cloud players. You've got AWS, Azure, and Google Cloud. Now, Google Cloud's revenue growth is accelerating, has started to reaccelerate since Q3 2023. Now it's growing at 29% year over year. Of course, still much smaller than Azure and AWS, but it's growing fast. All in all, this is how Alphabet makes money. This is from App Economy on X, great account to follow. So of course, the majority of its revenue comes from ads, $64.6 billion. And then you've got $48.5 billion, that was up 14% year over year. Search and advertising, 8.7%, growing 13% year over year, is from YouTube. Then you've got $7.4 billion, that's Google AdMob, so AdSense, Google Ad Manager. You've got Google Play and Google Cloud and some others. Gross profit is $49.2 billion, operating income $27.4 billion. Of course, the majority of the income is from the advertising business. Now today, Google stock, or Alphabet stock shall I say, is very, very cheap in my opinion compared to all the other big tech companies. Now it's true that management is not the greatest out there. It's true that they did screw up some things. It's true that right now we've got this breakup report, etc., etc. But a company as dominant as Alphabet is trading at a forward PE of just 20.3 times, EV to EBITDA 12.2 times, price to free cash flow 32.8 times, and then a price earnings to growth 1.16. I mean, it is very cheap in my opinion. It's a company that pays a small dividend, buy back quite a lot of shares, as you can see right here. In the last 5.3 years, it bought back 11.46% of shares outstanding. Free cash flow has gone up quite a lot as well. And so that's part one. If you think that by now you have made your conclusion, right? You're saying, okay, makes no sense. Even if they do break up the business is still quite cheap. Plus, if they do break up the business, then the sum of all parts apart is worth more than what Alphabet is worth today, which I agree, because every company will get probably a small premium if they are individual companies. Now, let's go over a couple of other things here. So, the division of core business units, what might happen? So you might have the search and advertising side. So Google's core business of search and advertising could be separated into independent entities. This would aim to increase competition in the search market. If you've got Android and Chrome, this operating system and browser could be spun off into separate companies, promoting competition in the mobile and browser market. I mean, Android is pretty open today, right? Android is very open, especially compared to iOS. So I don't really see how they'll win that argument. Then you've got the other business units such as YouTube, Google Cloud, Google Maps could also be considered for separation depending on the specific antitrust allegations. Again, here, Google will show them that, look, they choose us because we're the best. They choose YouTube because we're the best. I mean, YouTube has been around for a long, long time and they are yet to face any competition. Plus, they might say that Instagram and TikTok might be competing. So there is that. Then you've got the structural changes without full breakup. So data sharing mandates. So Google might be required to share its search data with competitors to level the playing field. They might do it. They might ask them to pay for that data as well. I don't know how that will work. Termination of exclusive agreements. So yeah, Google could be forced to end deals that make its search engine the default on devices like iPhone. Again, I think that will be a bigger negative impact on Apple than it would be on Google. And then AdWords restrictions, modifications on Google's advertising platform. AdWords might be imposed to reduce its competitive advantage. All of these changes, of course, will need to be, well, positive for the general public. Because if Google can prove that, look, if we make those changes, then companies, individuals that use our services are going to have a worse experience. And then you lose the public support to break up a big tech company and you basically lost the case. Are we so much worse with Android, Google Cloud, YouTube, Gmail, advertising, stuff like that? I don't think so, right? Because you've got Microsoft as a big player, you've got Apple as a big player as well. So yeah, it's true that Google is the dominant by far, the Google search. It's true that sometimes when you search stuff, they come up with things that they want you to see. That is also true. Those things need to be tackled. I don't think that breaking up Google will solve those issues. I don't think it will. So yeah, all in all, I think it's something to keep in mind, but I don't think it's something that will happen next quarter, next year. It will take a long, long time. And even when or if it happens, you as a Google shareholder, first of all, will get shares in the other companies. Probably you're going to get a premium as well. So you will be a winner in that sense. That's just my opinion. Then from a non-shareholder perspective, will things change? I don't know. I don't think so. And if they change for the worse from a consumer usage perspective, then what's the point? What's the point? Just because they say, oh, it's a monopoly, then our experience has to be worse? No, that's not how things should work. Plus, I do believe that today we have way more options than before. Might not be popular ones, but you have options. Me as an Android user, I have plenty of options. The operating system is pretty open compared to iOS. Let's be honest here. YouTube, if you don't want to use YouTube, okay, it's true that you have to go on Instagram, on TikTok, on Rumble. Maybe you might not get the same exposure, or maybe on X, but there are options out there. There are options out there. The only big issue would probably be the advertising Google search. But then again, people are saying, oh, ChatGPT came out, Microsoft Bing, it's a threat, Safari. And yet people keep on choosing Google search. So if Google does not need to spend $20 billion a year so that Apple would put Google as the default, that's $20 billion that stays at Google and does not go to Apple. That's a pretty big win. I think eventually they will figure some agreement out, something. Google will give a little bit, they will be a bit flexible, and that's about it. So for Google shareholders, I don't think you should panic. I think the stock is still quite cheap. It's still one of the best companies on the planet right now. And if something drastically changes, I'll make sure to update you accordingly. So that's about it for me in this video. Do share your thoughts down in the comment section below. Like, subscribe, hit all the buttons, and I'll see you all in the next one. Bye bye.